Good evening, everyone. I'm going to do an update using the ETFs that follows the market, and I'm going to start with the IWM, which is the Russell 2000 ETF. Here's the daily chart. On the daily chart, today was pretty much a confirmation of what I've been thinking or been analyzing for the past few weeks, and we're going to start with this. Okay, let's start with this high right here, 84.66, which was at the end of March. That was the top of this year. Now, since then, we came down, and all we've done is a little bit of I guess you can say, bearish flag or bearish um, wedge. After this, we broke down from this bearish wedge, which was at the end of July 23rd. Um, all we done is back tested this pattern, and once we back tested, we've had nothing but downage. Uh, Here you can see on the indicators and oscillators. The indicators, you have the 13-day moving average and the 34-day moving average. They're starting to do a bearish cross. You have on the daily also, you can see this massive, it's an outside bearish candle, which engulfs um, the previous days uh, body also. But okay, let's skip with this daily just to make sure we go through everything. You got the divergence here on the MACD, the negative divergence when because of the price keeps going up, but you have the MACD heading to the south. um, Even though price is moving up, you can see the divergence also in the stochastic. You can even see a V shape, an upside down V shape. This upside down V shape is a very um, you don't want to see that V shape, especially on the for the way down. Also, we have here a bearish cross on this oscillator, the Arun oscillator, and you have it on the extremes, which is under the 30 or above the 30 are extremes, and the moves when this happens, the moves to the downside or the upside are very fast and furious. So let's go into the weekly chart, because on the weekly chart, no, actually let's go ahead and do the monthly, because today's the first. On the monthly chart, I've pointed out here we have this uptrend line from the bottom here in the beginning of 2009. Now, the interesting part about this monthly chart is that we have a uh, bearish cross on the monthly, and we have it happened almost here at the highs. What does that mean? It means that more than likely this uptrend line, trend line, is not going to hold. You can also see on the monthly the uh, bearish divergence on the stochastic and also on the MACD moving averages. Also meaning that this move up was very weak. Both times, I mean, both oscillators are saying the same thing. Um, this is the Russell 2000. Now, I'm pointing out the Russell 2000 because the small caps are the first ones to fall, or the first ones to rise, because they're the easy, they're more volatile. I guess they're higher risk. So people that are per se placing their bets, they will be betting. Um, these are the first ones that move, so they are the prelude of what happens um, for the rest of the market. The next one that I wanted to look at is the Qs, which follows the uh, the Nasdaq. Here in the Qs, you see that we've had almost a triple top, um, where today was an outside bearish candle or an engulfing pattern, which it took out the highs and lows from the day before. Um, Also, you can see um, the moving averages of the MACD doing lower highs every time. And finally, here on this stochastic, you have almost a V shape going on, an upside down V shape going on from after what happened today. So same thing here. Will on the monthly time frame, we see this uptrend uptrend line that I don't believe is going to hold after this all plays out. Also, um, I want to show you the cross, the bearish cross on the monthly that just happened. Um, Either call it today or yesterday, whatever the end of the month. We're having that bearish cross, and that's gonna just um, give it more of a fun vacuum to the downside. It's gonna pull the the market, and it's gonna pull the Qs, which are the Nasdaq sector, the Nasdaq market, to the downside. Finally, wanted to look at let's look at the SPYs first, and then we'll look at the cash index of the S&P, only because there's a little bit of a similarities, but at the same time you can see some what's going on in the cash index. But in the spiders of the SPY, you can see here the left shoulder, the head, the right shoulder that we broke down from. We came down to July all the way to this low, and then all we've done is pretty much come back up to do a back test of this broken down pattern. Now, I had talked about before how we had entered the 38% retracement right here. We had entered it so deep that we will have to go to the 50% retracement. That's still in play. Unfortunately, this pattern that has developed has taken a little bit longer than I anticipated. Nonetheless, this will happen. You have confirmation on the moving averages of the MACD, of the stochastic, and you have almost an engulfing pattern, engulfing pattern of the candle, by taking out by engulfing the body of the prior day's candle. So you can see perfectly right here, all we did was come back and back test the neckline of this head and shoulder pattern that we broke down from um, back in May of last year. Let me just confirm that. My apologies. May of this year. I don't even know what I was where was where my head was at. But yes, right in May when I started talking about the go away in May. Um, it was starting a little earlier back in a little bit into April. So let's look at the S&P cash. This is the S&P, and pretty much I have the same drawn the same thing here on the S&P cash index, which you have the left shoulder, the head, the right shoulder, the neckline, and all we've done is pretty much come back and back tested, which the in the S&P cash index we haven't gotten there yet, um, and I don't see it going any much higher, but possibly we could. But after the action of today, after the Fed, what the Fed came out and had to say their 2 cents. Um, I don't think that we're going to have that push higher at, on the S&P cash. So uh, bottom line is that we're going to be going lower. The transportation sector is breaking down. The chip sectors is breaking down. The energy sector is about to break down. It's going to have a turnaround before you guys know, before anyone sees it coming. So more or less, stay clear. I think uh, I think this will develop a lot faster than everybody sees it coming. Like you can see right here, these down days took out anywhere from 80% to 100% of the move up, and I believe this last one is going to be way more way more fast and furious, I guess you can say. So we'll keep you updated on the next update. Will probably be the breakdown of this pattern and what you what targets will be from then. From what are the targets that you should be looking for after that. So thank you for listening. This is directionalanalysis.com.